morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, July 19th. Basically an inside day yesterday. Really not much. We did get a little bit of move to the upside, but really nothing to write home about. Markets are basically consolidating here. I'm really looking for a bigger move. I'll show that to you on the Spider 30-minute chart with the Bollinger Bands. We're starting to really tighten here. Energy is building for the next leg. It's whether it's going to be to the upside and or to the downside. You know, we're about 50 handles away from a 2200 print in the ES. It's very, very possible before we start to revert back to the downside. I did mention and show you guys some indicators. I'm not really going to get into it today because really not much has happened, and I'm not going to, fill the video up with just nonsense that's not going to give you any benefit. So today I want to look at the put call ratio, and you can see in front of you we're still mildly bullish. Okay, I like it when it's overly bullish here. We're looking for some sort of a pullback. We haven't gotten that. Right here is the SPX. As you can see, the cash. So we're still sitting there. The average true range is actually kind of curling a little bit down. That's also a bullish sign. Just as long as we don't get, too much of a bullish print. I mean, when you get right down here, you get extreme complacency. You want to start looking for a pullback. And the markets are just consolidating. That's not a bad thing either to see a possible breakout from where we are now to 2200. I know it sounds crazy, but it is what it is, guys. This is what we're dealt with, and that's what we have to deal with when during a part of our trading. But I do think that the bigger move again is to the downside. I mentioned that many times in the videos, and we are coming now into some seasonal weakness in the equity markets, where we are from July, right about July 18th, 19th, all the way up until October. Would not surprise me that if we get the revision to the mean like I showed you yesterday, and I'll show that to you again today. Here's the VIX breaking down on this really big area of support of about 12.5. You could see here we're starting to get a little bit of movement to the upside in the CCI. MACD and stochastics have yet to move to the upside, so really no positive divergence here. I am not looking to do anything in the VIX until we get a big move to the upside in equities, where we get a big flush in the VIX, and then that's when I'm start looking a little more enticing. I'd love to see a 11 handle, a 10 handle on this on the VIX, but I'm not sure if we're going to get that as of yet. You can see here RSI has not curled over yet and is not really oversold. So this has a little bit more room to the downside. That's why I'm thinking we might probe a little bit higher to the upside. But we'll see. Again, let's take it one step at a time. Here is the chart I showed you with just price. Have it labeled. Looking for some symmetry here, and you can see here 14-day up, 11 days, 13, and then 13. But look at the 13-day rally here. We came right back down. Look at the 13 rally. Look how far we are away from the 21 SMA here on a daily chart. So, and these Fibonacci retracement levels here are really true because they're right on the top of each gap just about. So 61.8% a golden ratio. I'd love to see it get down to this area here. Not sure if it's going to happen as of yet. But again, a logical area would be at least to the 23%, which is just the top of these moves, if not 38.2%, which is the 210 area here. I really like it to get back down to these areas, and then we would reevaluate and see that 21 would come. By the time that does happen, the 21 would probably curl right underneath that, and I think that would be a logical spot for the pullback. All right, I just want to show you the 60-minute. You could see here we still have negative divergence, actually really starting to look a little bit more. As you know, we had very little negative divergence. Now it's starting to pan out here. You could see that we're starting to roll over, and we're not going anywhere in price. We have a couple of, actually 3 days of inside day of movement. So you have to be very selective in your trading. When you see an inside day, step away and look for another asset class if you can, or if you do trade another asset class, you're probably better off maybe like gold or crude oil, or maybe a different sector as well, because when you have inside days like this, there's really not much happening. Right, 30-minute. Want to just show you that you have energy building here. You could see here on a 30-minute chart, inside day for the last 3 days. We had an inside day for the last couple of days, and then we had gap up and gap up. So really, believe it or not much trading that has gone on in the beginning of July, unless you were long and stayed long. So for the day trade, it's a little difficult. You get a big move up, you get the early move, and then you get sideways. You get a gap up, and we just went sideways here, and then we went sideways for 2 days, and another 3 days. So gap up. So really, the daily chart looks fantastic, but when you dial it down into a smaller term, short-term time frame, it doesn't look so enticing. You could see, but energy is building here. So this is something that we're going to be looking at in the coming days, and we're probably going to need some sort of a catalyst. Okay, it doesn't tell you a direction, but once that breaks out of that band, that's when you want to follow that trend. All right, and at least for the day. Transports looking a little constructive here, but again, guys, we did take out that one swing low, a swing high, excuse me. I want to see these other two swing highs get taken out and start flagging to the upside. Okay, this is definitely constructive for the bulls, no question about it. We did get a nice big move, and now we're kind of flagging here. We just filled that little gap, and now we're flagging into support, which was big time resistance. So that's a good 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 feather in the bull camp, that we if the transports can hold up here and we get some follow through in a Russell, we can easily test that 2200, not a problem. And here's the IWM you could see here, and you can see, guys, and this is, I put this out to show you on our premium video of these levels that we put out. You could see these hold. They're based on Fibonacci. They're based on a lot of certain areas that we put together at TMT here, so you can see how these areas really hold true here. So something to think about. Take a look at the site, tradingmarkettechnicals.com. It's really a great area, good levels to trade off of. Gives you guidance during the course of the trading day. And then lastly is the Qs. You can see here we really didn't go anywhere. We did have an outside day in the Qs. NASDAQ was the strongest out of all of them, and I do believe that was Apple, because of Apple. And then we just kind of stood here pretty much most of the day. That 115.50 really needs to get taken out if we're going to really start to expand here in this markets. All right, guys, I hope it helps. Have a great day. Please use your stops. And I do believe we're going to get some excitement this week, so stay tuned.